Welcome to CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. Today, SAP and Databricks announced a new partnership where SAP will embed Databricks software into their leading ERP software. And joining me now to discuss the deal and much more is SAP CEO Christian Klein. Christian, thanks for joining us.
Great to talk to you, Frank.
Let's start off with this new deal. Explain what this deal is going to do for SAP and your leading ERP software and the customers that use it.
Look, Frank, every company today sees the massive potential of AI for their company. Now, every company is also facing the same challenge, data silos. Data is fragmented today. And there are no better companies than SAP and Databricks joining forces, because what we are doing is we are building the industry-led tech platform for data. And so we are opening up data to match SAP and non-SAP data, so that companies have a 100% accurate view on their consumers, on their suppliers, on their total workforce, on their balance sheet, on their financials. And with that, when you have high-quality data, AI can unfold enormous value. And now agentic AI, our tool, our digital assistant, sits on top and can really, orchestrate agents from the front line to the supply chain, to HR. And so now with BDC, our new offering, we can unfold the full potential of AI.
We hear a lot of talk about partnerships between big tech companies and these AI startups. Sometimes it's focused on AI agents and agentic AI and things like that. I want to ask you, how does this partnership, how does it separate itself from the rest of the pack? What makes it different specifically for your customers?
Yeah, happy to share with you, Frank. Look, AI has enormous value, as I said. But what every company is really struggling with is bad data quality. And with having bad data quality, AI has only little value. And now what we are doing, SAP sits on a big treasure. We are actually having access to the world's most mission-critical business data. Now we are saying we are opening up the business data of SAP, and we are matching non-SAP data to it with Databricks. So companies can build one harmonized data layer for their end-to-end value chain. And with that, they can not only steer and understand their business in a much better way, they can now also unleash the full value of AI. And so SAP, sitting on a big treasure with the world's most mission-critical business data, and Databricks coming in, matching non-SAP data, is the winning formula.
So you just had your earnings just a short time ago. Your ERP suite, it grew by 33% in the fiscal year. What is this going to do? I'm talking on the investor side here. What's this going to do for that business that is such a big part of SAP? Is it going to grow revenues? Is it going to grow the customer base? What's the impact if investors look at your balance sheet? What will they see?
Frank, indeed. I'm very proud about what the company has achieved over the last 4 years when we started this transformation. And in the meantime, customers completely get the value of running businesses end-to-end on our platform. And then by infusing AI, you actually see right away the value of AI sitting in your business processes, in your business modules. And now with our new offering, Business Data Cloud, obviously that will help also to further drive the growth of SAP. We have ambitious targets. We just talked about it, about earnings. And that is another great innovation which will drive SAP's growth for many years to come.
Where do you see AI going? Just a few weeks ago, we got the shock of DeepSeek that seemed to shake up everybody's perception about the moat when it comes to scale and also having a lot of capital. It shook up people's ideas about what chips you really need to develop new models. What is your take on the change when it comes to the view of energy needs, AI infrastructure needs, chip needs following DeepSeek?
Yeah, look, Frank, actually what happened with DeepSeek is actually good for SAP. 4 years ago, I got many questions. Why is SAP not developing our own large language models? We always said this will become a commodity. There will be not one large language model. What really makes the difference at the end, where the value creation will happen, is on the business, on the application side. So we built organically a very strong AI foundation. Joule, our digital assistant, now with agentic AI, we have access to the world's most mission-critical business data. And we are super agnostic to any kind of large language model. So we are using the best large language model for the different use cases. So what is happening with DeepSeek is good with us because we are giving customers choice and we use the best module for our business AI use cases.
So it may be good for you, but if you look at the stock prices of a number of other tech companies, especially in the semiconductor space, it does not seem to be as good for them. So I want to ask you, I'm sure a lot of these people are your friends, but I want to ask you to answer as honestly as you can.
Yes.
Has this changed your view on the need for GPUs? Has it changed your view on the idea that you need large data centers with big clusters? In the industry, when you're talking to your customers, what are they saying to you about their needs and the view that these NVIDIA chips are, as you say, mission critical as opposed to being able to use other chips and create some of these developments that we've seen with DeepSeek, if the claims are true, for considerably less money than a lot of other competitors, considerably quicker, and without those advanced chips because of US restrictions?
Yeah, look, Frank, I mean, we are not in the AI infrastructure business, but what I can tell you from what we are seeing as SAP, our pipeline was never stronger on business AI. So there will be also further demand coming, just, here from a sheer volume perspective, for more GPU, for more hardware. When I'm looking at our business applications, only this year we're going to ship more than 400 new embedded AI use cases in our supply chain portfolio, HR, finance, etc. And that will also drive further demand for AI infrastructure. So I would say there is enough business to also to grab also on for all these infrastructure providers.
Okay, fair enough. You're not in the AI infrastructure business. You actually partner with the hyperscalers,
yes,
with Microsoft, Google, and also Amazon. But you are in business in Europe.
Yes.
This week, we had the Vice President of the US here, J.D. Vance. He was in Europe, in Paris actually, at the AI Action Summit, and he had a lot of words about regulation, and what I'm going to characterize what he said as being very critical of over-regulation. What's your view of regulation in Europe right now, and how does it impact your business?
I mean, looking back at the first weeks of the new US administration, I have to say I'm completely with him. And there is no doubt that Europe is completely over-regulated. And I said it also a few weeks back. I mean, this needs to be a wake-up call for Europe. Because when you over-regulate, before you can innovate, you kill actually innovation. And look at many startups in Europe. This is not an environment where you can be successful. We as SAP, we have a big lab here in the United States. We have a lab in India. So we have choice. But with this over-regulation in Europe, they are killing innovation. And then when every one of the 27 member states has their own regulation, again, how should this work together? So I'm absolutely in for reducing regulation and also first innovate.
You've been watching this administration for the few weeks. It's had power in D.C. right now. It seems like it's been a bit longer than that, but it's only been a few weeks. One of the things that's come up is tariffs.
Yes.
We heard a lot of talk about potentially tariffs on Europe, and we've heard European leaders talk about retaliatory tariffs. How would that impact your business? How would that impact the business of your customers?
I mean, on tariffs, for us at SAP, it's too early to tell, but the US is our most important market, the biggest market. We have our labs here, we have our own legal entities here, we are innovating here in the United States. What is for us very important, all these multinationals, also in the United States, they are doing a global business. And no matter if it was at Brexit or when COVID hit us, our software needs to make sure that they can still continue to run a global supply chain. And the same is true now. I mean, they are reaching out to SAP and see our software as a solution to still do global trade and run global supply chains.
All right, so they're looking to you for a solution. So if someone wants a solution, that means they think there's a problem, generally. So when you're talking to your customers, what are they saying the potential problems are with these tariffs and some of these different shifts in trade?
I mean, clearly, when we are talking to our customers, when I'm talking to other CEOs these days, clearly a big topic is around the fragmentation of supply chains. You localize more and more the supply chains to have not a risk of tariffs or actually getting hit by other regulations across the world. We are also seeing customers who actually have separate ERP landscapes now in certain parts of the world. So yes, this costs money, but customers already now planning to actually mitigate those risks by investing more into technology.
So your business benefits if we see more cooperation between Europe and the US, Europe and other continents. Are you concerned about the impact of tariffs, not only on trade and maybe making goods cost more money to go across borders, but also the business sentiment
I mean, look, obviously, what we benefit from is when the US economy is doing well, also SAP is benefiting from that heavily. And then also, of course, when the world economy would now come down, that would have an impact on budgets. Oftentimes what I see in this kind of situations where a crisis hits the market, oftentimes technology is seen rather as a solution to overcome those challenges. So when I look at the history of SAP, every time when there was a crisis in the world, our software, to my point earlier, is actually more seen as a solution, as an enabler to overcome those challenges.
All right. I know you have to be careful, but I do have to ask you, tariffs, are they good for your business, good for the business of your customers, or bad for your business and bad for the business of your customers?
First, we are not overly concerned as SAP now about some potential upcoming tariffs, and it's too early to tell, Frank. Okay. Now, but again, also on the business side, on the go-to-market side, as I said, we actually see this also as a chance, as an opportunity that we can help our customers to still run global businesses and to offset the risk of tariffs, hitting their business.
But in all fairness, they're coming to you for solutions, so they see it as a problem.
Yeah, of course. Look, as a CEO these days, or when you are head of the supply chain, obviously you need to think about how can I diversify my supply chain. I still have to run a business. I still need to run it also in a more productive way. That is what our investors are expecting from a company. And so yes, they are absolutely already going through various scenarios, and we are seeing that, and they are coming to us and say, hey, how can SAP help me with that?
Another thing that's going on in the markets outside the stock market, outside the bond market, is the currency market with the dollar strengthening considerably over the last couple of months. You report in dollars, so that actually the stronger dollar helps you. But when we're looking at just tech and IT spending, budgets, et cetera, how is the stronger dollar impacting things both in Europe and in the US?
Look, yes, SAP is definitely also benefiting from a strong dollar, but also vice versa. Here, same thing. A lot of customers reaching out to us and say, hey, let me look into your cash flow optimization AI use cases you're having. How can you help us to get better financing conditions? How can you help us to optimize my cash flow to offset this currency risk? Again, oftentimes CFOs are talking now to us and say, hey, how can technology help me to offset this currency risk? And there are big deviations over the last years. Not only US dollar to euro, also other currencies have seen huge fluctuations, but there is software for that where you can offset this risk.
Are you seeing budgets get trimmed a bit because of the stronger dollar and the idea that this currency is more of a headwind than initially thought just a few months ago?
Look, you have probably seen our earnings, you have seen our guidance. We are very optimistic for the year. Yeah. And again, also in situations when certain challenges hit businesses, they are seeing oftentimes technology or software, business software, as a solution to it. No, we are remaining confident for the year.
All right. Christian Klein, CEO of SAP, announcing a new partnership with Databricks today. Thank you so much for your time. Thank all of you for watching CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange.